Okay, but the next thing that we are going to study is the analysis of the published accounts. When we talk about the analysis of the published account, we need to study two things. One is analysis of the income statement, and second is analysis of the statement of the financial position or balance sheet. In the analysis of the income statement, we calculate three types of ratios. One is called, in fact, four types of, fourth is not we are studying right now, but three are we are studying right now. Gross profit margins, gross profit divided by revenue multiplied by 100. Operating profit margin, operating profit divided by revenue multiplied by 100. And then a net profit margin, that is net profit divided by revenue multiplied by 100. To understand this, that why we calculate these types of ratios, we need to make an income statement and we need to identify that what is the reason that we study these types of ratios. The statement that I'm drawing in front of you is comparison of 2 years. One is 2021 and second is 2022. For example, the revenue for 2021 was 500,000, that increased to 600, for example. Thousands, in thousands these figures are, minus cost of sales. In 2021 that were 200, that increased to 250. And we calculate gross profit from both. The gross profit is 300 and for 2022 this is 350. Okay. If examiner asks us generally which year is better, all of you are reading this statement, 2021 and 2022. Which year is better according to you? What do you think, Hamza? Which year is better, 2021 or 2022?
22.
22 is better. Okay. And what is your point of view, Adnan? Which year is better, 2021 or 2022?
The revenue increased in both and cost of sales also increased, but revenue increased like by 100,000 where cost of sales improved by only 50. So 2022 is better.
Okay,
Because
everybody would say this. Everybody would say this. That is what you people are saying. Everybody will think in this way you are thinking. But we economists, we business students do not think in this way. We always calculate gross profit margin. GPM stands for gross profit margin, and we calculate the equation in such a way that ratios are in front of us. Okay, let's calculate gross profit margin for 2021 and then 2022. For 2021, the formula is gross profit over revenue. I mean 300, the gross profit, divided by 500, the revenue, multiplied by 100. What is the answer, Adnan? 300 divided by 500 multiplied by 100. That is 60%. Okay, now let's move to the 2022. For 2022, what is gross profit? 350. What is the revenue? 600. Let's put them into the formula. 350 divided by 600 multiplied by 100. The answer is 58 point?
58.3.
58.3%. Now, what has happened, boys, that the gross profit margin for 2022 has decreased. Although the revenue was higher, the gross profit was higher, and we were saying that the 2022 is better as compared to 2021. But what has happened? Okay, gross profit margin has decreased. Okay, do a little maths here. Look at the revenue. What is the percentage increase in revenue, boys? From 500 to 600. How much percentage revenue has increased? From 500 to 600. How much percentage the revenue has increased?
20%.
20%. Yes, okay. And how much percentage the cost of sales has increased from 200 to 250? Look at this figure. Cost of sales कितने % increase होंगे?
25%.
25%. यस, अब हमने सेल्स तो बढ़ाई 20%, लेकिन सेल्स के लिए जो एक्सपेंसेस थे वो बढ़ा लिए 25%. इट मींस आवर सेल्स आर इंक्रीजिंग, यस, बट आवर एक्सपेंसेस फॉर दोज इन टू इनकर दोज सेल्स आर इंक्रीजिंग. To make those goods that we are selling are increasing more than the increase in sales. As a result of that, our gross profit margin has decreased. This is the way we business students, this is the way we analysts think the things in the way. Okay, let's minus the operating expenses. For example, operating expenses are 100 and 130. What is the operating profit now? That is 200 and 220. Let's minus all the other things. For example, interest from here, 100 and 115. For example, the net profit or the profit before tax will be, PBT stands for profit before tax, 100, or net profit 100 and 105. Again, looking at this situation, you will identify that a layman would say 2022 is still better because net profit or profit before tax is still higher than 2021. But if we calculate the net profit margins, that will be the formula for net profit margin. You know that that is net profit over revenue multiplied by 100. Putting the formula, 100 over 500 multiplied by 100, and then 105 over 600 multiplied by 100. What is the answer in both cases, Hamza? 100 over 500 multiplied by 100, answer is? All of you are silent.
20. Said 20.
20%. And what is the next situation?
17.5.
17.5. Again, why the net profit margin has decreased? It was higher in 2021 and it has decreased to 2000, decreased in 2022. The reason, because we have increased all of our expenses in such a way that our net profit margin has decreased. So this is the way we analyze the things. This is the way we look into the income statement of our business.